Welcome to the deep dive. Today we're going to be looking at HEG Ltd's recent financial performance.
Yeah.
They're a leading manufacturer of graphite electrodes,
Hmm.
and those are, of course, crucial components for electric arc furnace steel production.
Right.
We've got their Q2 FY25 press release, their investor presentation,
Okay.
and some guiding questions to help us unpack it all.
Great.
So by the end of this, you'll have a solid grasp on not just HEG's current standing, but also some insights into the future of the graphite electrode market itself.
It's a fascinating space, especially now with all the global shifts happening in the steel industry.
Right. HEG is actually a global player,
Wow.
exporting 65 to 70% of its production to 35 countries.
Impressive.
They've been around since 1976, steadily building up their capacity
Wow.
to a whopping 100,000 tons per year,
Yeah.
making them the third largest producer in the Western world.
And what's particularly noteworthy is that they're the last new entrant globally in this industry.
Really?
Graphite electrode production is a high-tech, high-investment game.
Yeah.
So breaking into this market is no small feat.
Okay, let's unpack this in their recent expansion to 100,000 tons.
Okay.
That seems like a bold move considering the current global market conditions, wouldn't you say?
It's certainly a decision that requires careful analysis.
Yeah.
The investor presentation paints a picture of a global steel market facing some headwinds, particularly with the slowdown in production, especially in China.
And if steel production slows down, that directly impacts the demand for graphite electrodes.
Precisely, less steel production means less need for the electrodes used in electric arc furnaces.
Okay.
And this slowdown, coupled with increased Chinese steel exports, is putting downward pressure on global steel prices.
So
Since HEG is a major exporter, they're feeling the effects of these global forces.
how did HEG actually perform in Q2 FY25 amidst all of this?
Well, their revenue came in at 567.60 crores.
Okay.
It's a slight dip from the previous quarter, but their profit before tax PBT remains strong at 82.48 crores, with earnings per share EPS at 3.22.
So it seems they're maintaining profitability even with a slight revenue dip.
Right.
What explains that?
It's important to keep in mind the challenging global environment right now.
Yeah.
That dip in revenue isn't surprising given the overall slowdown in demand.
Okay.
HEG's ability to maintain a strong profit margin despite these challenges suggests they're managing their operations efficiently.
And speaking of efficiency, their investor presentation emphasizes their investments in improving plant parameters.
Yes.
They're really focusing on remaining a top producer in terms of both efficiency and the quality of their electrodes.
Yes, that's a key strategy they're employing to navigate this turbulent market. They're not simply riding out the storm, they're actively positioning themselves for a stronger future.
But they're also facing increased competition from Chinese graphite electrode producers,
Right.
especially with China's oversupply leading to price declines.
Yeah.
How are they addressing this challenge?
Yeah. That's a significant pressure point for all graphite electrode producers, not just HE.
Right.
However, their focus on operational efficiency and high-quality products could give them a competitive advantage.
It seems HEG is taking a proactive, long-term approach,
Yeah.
expanding capacity, investing in operational improvements,
Right.
and navigating a complex global market.
Uh-huh.
What does all of this mean for their future outlook?
That's where things get really interesting. Remember the global shift towards electric arc furnace steelmaking we mentioned earlier?
Yeah,
This trend is intrinsically linked to the push for decarbonization in the steel industry.
because EAFs are significantly less carbon intensive than traditional blast furnaces, right?
Exactly. As the world seeks to decarbonize the steel industry,
Yeah.
the adoption of EAF steelmaking is only going to accelerate, and that's good news for graphite electrode producers like HEG.
Their investor presentation actually predicts an additional demand of approximately 200,000 tons of graphite electrodes by 2030, excluding China.
Wow.
That's a substantial increase.
It is, while short-term challenges certainly exist,
Mm-hmm.
HEG seems to be strategically positioned to benefit from this long-term growth trajectory.
Yeah.
Their expansion, coupled with their focus on operational excellence, could be a winning formula for the years to come.
Now, beyond the numbers, HEG has also made some interesting leadership changes and strategic investments.
Right.
Their press release mentions the appointment of Dr. Kamal Gupta as an additional director,
Okay.
bringing a wealth of experience in finance and corporate law to the board.
Mm-hmm.
They've also appointed Mr. Ravikant Tripathi,
Yeah.
a seasoned professional with 31 years at HEG as your new CFO.
Yeah.
But one investment really caught my eye.
Oh.
They're moving to acquire the remaining shares of Bilwara Info Technology Ltd,
Interesting.
making it a wholly owned subsidiary.
That is an intriguing development.
Bilwara Info Technology Ltd operates in the IT-enabled services and BPO space.
Okay.
It seems HEG is interested in diversifying beyond the graphite electrode market.
Which raises some interesting questions. What does this foray into the IT sector signal about HEG's overall business strategy?
Right. Could this be a way to hedge against the cyclical nature of the steel and graphite electrode markets?
It's certainly a possibility.
Yeah.
It suggests they're looking for growth avenues beyond their core business, potentially seeking more stability and exploring potential synergies.
And on that note, maybe we should take a closer look at their financials to see how this diversification strategy is playing out.
Let's do that. One thing that stands out in their standalone financial statements is the fluctuation in other income and expenses related to mark-to-market gains and losses on their investments.
So even though their core operations seem to be solid, external factors like market volatility are still impacting their bottom line.
Exactly. It highlights how a company's financial performance can be influenced by broader economic forces, regardless of how well their core business is doing.
That's an important reminder that no business operates in a vacuum.
Yeah.
They're all subject to the larger economic tides.
Absolutely. And speaking of broader economic forces, the investor presentation offers some insightful data on the global steel landscape.
Okay.
Global steel production actually declined in the last quarter.
Yes, I saw that, especially in China, traditionally, a massive driver of steel demand.
Right.
They're attributing it to subdued demand and increased pricing pressure from Chinese steel exports.
That's a key point. China's increased exports are putting downward pressure on steel prices globally, which directly impacts the demand and pricing for graphite electrodes.
So it's a chain reaction. A slowdown in one part of the world ripples through the entire industry.
Precisely. But even amidst these challenges,
Yeah.
there's a glimmer of hope for HE and other graphite electrode producers.
You're referring to the push for decarbonization, right?
Yes.
The investor presentation predicts this could lead to an additional demand of 200,000 tons for graphite electrodes by 2030.
Exactly, because electric arc furnaces, which rely on graphite electrodes, emit significantly less carbon than traditional blast furnaces. As countries worldwide commit to reducing their carbon footprint, the steel industry is under pressure to adopt cleaner technologies.
So HEG is facing short-term challenges from the global steel slowdown and Chinese competition, but they're also poised to benefit from the long-term trend of decarbonization.
It's a classic example of needing to balance navigating immediate market realities with anticipating the broader long-term trends that will shape the industry.
And it seems HEG is doing just that, expanding their capacity, investing in operational excellence, and even exploring new growth avenues through their IT subsidiary.
It's a multi-pronged strategy that reflects their understanding of both the challenges and the opportunities ahead.
Now, before we move on to the next part of our deep dive, there are a couple of details from HEG's press release I wanted to touch on. First, their financial statements mentioned a composite scheme of arrangement. Do you know what that's about?
Yes, that refers to a plan approved by HEG's board to demerge their graphite business into a separate entity called HEG Graphite Ltd. They're also planning to amalgamate Bilwara Energy Ltd, an associate company, into HEG Ltd.
So essentially, they're restructuring their business.
Exactly. It seems they're streamlining operations and potentially unlocking value for shareholders.
Interesting. And there's one more detail. The press release mentions a subdivision of their equity shares.
Right. Their shares, which previously had a face value of 10, have been subdivided into 5 shares, each with a face value of 2.
What does this mean for investors?
It makes the shares more affordable and accessible to a wider range of investors.
Okay.
While it doesn't change the underlying value of the company, it can impact trading volume and potentially attract more retail investors.
It sounds like HEG is making some strategic moves to position itself for future growth.
Yeah.
Their performance this quarter, despite the challenging global environment, seems to reflect their commitment to operational excellence and their long-term vision.
Agreed. They're facing headwinds, but they're also making proactive decisions to navigate those challenges and capitalize on emerging opportunities. It's a dynamic situation, definitely worth following.
It really does highlight how external factors can significantly impact a company's performance, even when their core operations are doing well. It's a reminder that you need to consider the broader economic context when evaluating any investment.
Absolutely. You can't just look at a company in isolation.
Right.
You got to factor in those global trends and market forces.
And that brings us to the end of part 1 of our deep dive into HEG Ltd.
Okay.
Make sure to join us for part 2, where we'll further dissect HEG's strategy and explore what the future may hold for this company.
We'll be back soon with more insights and analysis.
Welcome back to the deep dive. We're continuing our exploration of HEG Ltd, a company navigating the exciting yet turbulent world of graphite electrodes.
We left off discussing how HE is balancing those short-term market challenges with a sharp eye on the long-term trends, particularly the global push for decarbonization.
Right, and that's where things get really interesting. HEG's investor presentation predicts that this shift towards greener steel production could lead to an additional demand of 200,000 tons for graphite electrodes by 2030.
That's a huge potential market, and with HEG's recent expansion to 100,000 tons per year and their continuous investment in operational improvements, they seem well-positioned to capitalize on it.
It's like they're playing a long game, recognizing the current headwinds, but making strategic moves to set themselves up for success down the line.
Precisely. They're not just reacting to the market.
Right.
They're actively shaping their future.
And let's not forget the wild card in their strategy.
Oh, right.
The acquisition of Billwara Info Technology Ltd.
Yes, that move into the IT sector raises a lot of questions.
Will it create synergies with their core graphite electrode business?
Right.
Or will it take them in a whole new direction?
It's a bold move that suggests they're thinking outside the box and looking for growth beyond the traditional steel industry. It speaks to their adaptability and willingness to evolve as a company.
Okay, so we've covered HEG's financial performance, the global steel market dynamics, the impact of decarbonization, and even their strategic investments and restructuring.
Right.
What stands out to you as the most important takeaway for our listeners so far?
I think the key takeaway is that HEG Ltd is a company at a crossroads.
Okay.
They're operating in a volatile market, facing both short-term challenges and long-term opportunities. What's impressive is that they're not just reacting to these forces, actively shaping their destiny through strategic investments, operational improvements, and a willingness to adapt their business model.
You're right. It's not just about understanding their current position, but also appreciating their potential for future growth.
Exactly. HEG's story is a reminder that even in complex and challenging industries, companies with vision, agility, and a commitment to excellence can not only survive, but thrive.
It's a reminder that we should always be looking beyond the headlines and digging deeper to understand the forces shaping a company's trajectory.
And for anyone following the steel industry or interested in companies navigating the complexities of decarbonization, HEG is definitely one to watch.
Absolutely. Now, before we wrap up this deep dive, I want to leave our listener with a thought-provoking question.
Oh, I love a good brain teaser.
Based on what we've learned today.
What do you have in mind?
Well, we talked about HEG's move into the IT sector through their acquisition of Billwara Info Technology Ltd. This diversification strategy is fascinating. But it also raises some interesting questions.
Such as?
How might this new venture impact HEG's overall business strategy and risk profile in the long run?
Okay.
Will it create synergies with their core graphite electrode business? Or will it lead them down a completely different path?
It's like we've opened a new chapter in HE's story, and the ending is yet to be written. It'll be interesting to see how they leverage this new asset and whether it helps them navigate the turbulent waters of the global steel market.
It certainly adds another layer of intrigue to HE's story. And I, for one, am eager to see how it all unfolds. So to our listener, we leave you with that question to ponder. Welcome back to the Deep Dive. As we wrap up our exploration of HEG Ltd, let's take a moment to recap the key takeaways from our deep dive into their recent performance and strategic moves.
Yeah, we've covered a lot of ground. From their solid Q2 FY25 financials to the challenging global steel market dynamics and their bold expansion plans amidst a slowdown.
Right. We also discussed the long-term potential of the decarbonization trend and how that could translate into increased demand for graphite electrodes, which is great news for HEG.
And let's not forget their intriguing move into the IT sector with the acquisition of Billwara Info Technology Ltd. That's a development we'll be watching closely to see how it unfolds.
It certainly raises questions about their long-term strategy and how they plan to navigate the evolving landscape of the steel industry and beyond.
HA is clearly a company at a crossroads facing both immediate challenges and exciting possibilities.
Their commitment to operational excellence, their strategic investments, and their willingness to adapt suggests they're ready to tackle whatever comes their way.
And for those of you who are following the steel industry or interested in companies at the forefront of the decarbonization movement, HEG is a company to keep on your radar.
Absolutely. As we conclude this deep dive, we encourage you to continue exploring HEG's story and consider how the trends we've discussed might play out in the coming years.
There's always more to discover, more to learn, and more to analyze.
Thanks for joining us on the deep dive. We hope you found this exploration of HEG Ltd insightful and engaging. Until next time, keep diving deeper.